Well, hello members, LA here. It is January 11th. We're heading into the second full week of trading. As you can see, last week, down week, we're down on the year. Pretty much, you know, last week was the losses. It was flat coming in, except for the Russell. The Russell took the heat last week. That's not a good sign. But at the same time, the Russell had been the one up the most. So as we pull back, Russell has more beta and has just given up more. We saw a little outperformance in the NASDAQ. That was primarily due to Apple and the chips. And so, that will be what we're watching to some extent this week as we come into the earnings season. And it's going to be about earnings this week. And if we scroll down and kind of look at the fundamental technical, quick review of what happened last week, we got employment numbers on Friday. They basically told us there's more people working and they're making a little bit less money. So it's kind of a dual-edged sword there. I don't think it was, that good or that bad. We actually sold down on that news, but that was because of the technicals, not so much the news, in my opinion. Economically, last year we were having pretty good run in the economic numbers, middle of the year up until say October or so. And since then we've seen it level off both here in the States and around the world. Around the world, a lot weaker than U.S. The U.S. still pretty strong, but the numbers aren't pressing higher and higher. And capitalism's all about selling more widgets, and if you can't sell more widgets, if there's not more buyers, that makes it harder for companies to produce profits, and that eventually affects the market. So something to continue to monitor. I don't know that it makes that much difference this particular week. But at some point, this needs to turn back up and show, increasing strength in the economies of the world. Another huge factor, again, 11% down on oil this week. That thing has dropped more than 50% now over the last 5 months. That to me was the biggest factor again last week. Although we have had, 50% drop in price, we still haven't seen a low put in. Now we got a 2-bar reversal on Friday, so there may be a short-term bottom here. We'll look at that chart in a little bit. That could put or take some of that pressure off these equity markets. And then the last point I think is probably the most important one. That is we range traded last week, which is what was expected. If you remember the first week, we didn't get what was expected. We failed on the retest regenerate zones, and instead of holding them, we actually traded lower. So let's review that to start with and consider what's happening here, because I think this is probably what you really want to watch this week. If we go back and we look at the end of the year, first of the year, we broke down on a retest regenerate here off that prior swing point high, which put us into a range trade on this index. When that happened on the Russell, right? Remember, the Russell was the strongest one. And if we flip over and look at it, when the Russell came back down and couldn't hold the range, right, that told us, okay, these trades really are range trades now, because the strongest index now has broken back down. And so that break here to start the week put us back into range trades on all these indexes. Now I'm going back to the S&P because I still think, as I told you late last week, that the S&P is the best read right now, and this is where we should probably focus in terms of our reads. So going back to this, the big bar right now, well, let's talk about the range trade first. As we broke down and couldn't hold, and then the Russell broke down to tell us, yes, it is a range trade across the indexes. The question was, where's the bottom of the range, right? Will it come all the way back to the lows, or is it somewhere above that? I was looking at this particular area as potentially a place to hold. It got underneath it, but that underneath on Tuesday set up a nice intraday reversal that I had reviewed elsewhere, and I'll quickly review with you here. And that is if I put the S&P up and put this on like 5 days, we had this reversal set up on Tuesday the way it was trading. So it comes down, makes the lows, right, comes back up some, and then we saw swing point highs form, and we nestled up underneath them, right? And it looked as if we would get a break higher. And if you remember, I was trying to buy, or I was expecting to buy that next day. I had notes out in that afternoon that I wanted to buy the next morning. Well, unfortunately, it gapped up, and the gap really wasn't here. The gap was up to there. That's where it opened, up in this 2040 range. And as a result, there was no trade. But you could see the reversal setting up, and so it did what was expected and held, not held, but it came back the very next bar. It got back up inside this. Now, the key thing now on this chart is that you have three ranges. You kind of have this middle range here. You have this range down below it, and you have the one above it. Now, when I look at these, this bounce took us in 2 days, took us right back to the big bar that we talked about in the morning notes the last couple of days last week, and it fell right where it should. That reinforces the thought that it's a range trade for now. The great part about this, if you know what to look at, or if you're looking at this, in my opinion, what to look at is this bar. And the reason for that is that's the big wide price spread bar off the Fed meeting back in December. And that bar is the bar now that has the tight range that we can look at. And if we look at the top and bottom of that bar, 2061 down to 2019 roughly. So you got about 43 points? So 43 point range, 42 point range, I guess, where this market more than likely trades the first 2 days of this week. I suspect it will be inside this range. Now, they may surprise me and do a post or pre-earnings run higher, but I kind of doubt it. I suspect we're going to stay in here, especially with Friday's failure at that key level. That's going to set up the latter part of this week as the part of the week that we should focus on. And what we want to see is, will this thing break to the downside, or will it break to the upside out of this particular range? That's going to give us the heads up. If we start to break topside, right, then we're going to want to try to add exposure as fast as we can, because more than likely it's going to make new highs. If we break to the downside, then we want to continue to be as careful as possible, because that's probably going to test this low again. And if that break doesn't happen until Thursday, this will print as a swing point low as well. So you have the potential for multiple swing point low breaks to the downside, which really could give us some trouble. So that, to me, is the primary thing to watch this week technically, right? That's probably going to give us the key this week as to what is or isn't happening. Now, inside the markets, I think the key area is going to be XLF. And I say that because the earnings, this market has been selling off in the financials pre-earnings. And you got all the big earnings coming out, not all the big ones, but you have a number of the large earnings coming out in the financial sector this week. And that's going to be a critical piece of what happens this week. So you can see the setup here. You've got a swing point low here that could break. And if I pull this to a weekly, let's get a weekly chart here as well. Pull this over. You can see on the weekly, that swing point high, we did a retest regen higher. Now we're coming back the second time. That drops the odds to about 61 or 2%, I believe. So our odds are going to be a little bit lower here as we come back in this to hold. Now, what looks good is if we come back, right, there's some good support down here, but you certainly don't want to buy up here if it's coming all the way back to there. So this, to me, is going to be the key area near term, primarily because you have earnings in a number of these stocks this week. And that starts Wednesday morning. JP Morgan is one of them. This one's set up to try to test that low again, is the way it looks like to me. Another one, Wednesday morning, Wells Fargo. This is one of my favorites. It did break here, got a little push back up, a retest, regenerate to the downside is what it's doing. This one's going to try to push lower, probably back to this gap area. So that one looks pretty negative. If I keep going Thursday, let's get the right symbol up. Bank of America on Thursday, you can see almost every one of these are set up the same way. They got swing point lows underneath, and they look like they're going to try to test them. Citigroup, also Thursday. These are before the market opens on Thursday. They look like they're going to try to test lower as well. Friday, you got Goldman Sachs. This one looks a little bit stronger than the others. It may hold, but that, they all kind of have that negative kind of a H-looking type pattern, if you will. They've all come down, got their bounce, and now trying to come back down and break. So you come up, right? It's the failed test that you always worry about in these stocks, and they all look like they potentially have a failed test that they're setting up. PNC, kind of a little lesser name, but also same setup there. And the last one this week will be STI, which is SunTrust, also set up to break swing point lows, and in this case break multiple swing point lows. So when I look at the financials make me nervous coming into this week. I think that's going to be the key area. That's going to put the pressure on the S&P 500 to try to break down if those earnings really do not push. If the earnings don't end up pushing these stocks higher, we're going to get pressure on the S&P, and pressure on the S&P is going to break that smaller range we were just looking at and suggest some sort of a test to the downside. So as you can gather from my opening here, I'm concerned about the way we've set up. All potentially is going to be a positive now, and the reason for that, of course, is if I look at the oil market, and there's two instruments, ETFs, that we can look at. The better of the two is the OIL. This one got under, back over. That looks like a little two-bar reversal after a huge decline. The other one is the USO, much tighter in terms of the volumes, but also under, over, less volume. It's still, there's no comparison to the two, actually. It was a little bit, on the 2-bar, it was lighter. On the big bar down, no comparison. All looks like it's probably going to bounce. So you're going to have the positive where the big pressure is coming off, but you're going to probably have the negative unless those earnings really surprise to the upside on the financials. And that makes me want to stay careful a little bit longer until we see what those financials do and how this market trades them in the coming days. So that's kind of the big overview. Let's pop down into some of the more details here. So the negatives, you had that test failure right where it should. The financials I just talked about. Another one is the transports. I don't know that this is hugely negative, but it's not clear what's going on here. So when I look at the IYT, for example, all down 50%. You would think these things are going to push higher, not lower, and they can't get off the dime, right? And they're really struggling. And that makes me wonder, is there something going on here bigger than I can see? Or is it just the fact that these things move so far already in anticipation of the oil decline? Because the markets, anticipate this. And when the oil was selling off, these things came back the fastest and most fast and furious on the way back up. So I don't want to discount this to the point where it's like, okay, it's not a problem. But at the same time, there seems to be some issue in oil, and that's kind of a background, just keep it in your head kind of thing. I don't know what to make of it yet. TLT, bonds. These continue to show concern in the markets, in my opinion. I know that there's a lot of support in bonds. You know that I'm bullish on bonds in general. But the fact that they can make this spike and still hang up here just tells me that there's still fear in these markets right here. And we may test that top again, and then that would be maybe where they turn. And that could come off some, disappointing earnings later this week. This thing spikes back up, test, and then eventually we get the turn in the equity. So, right now, when I look at all this stuff, it just says, okay, I need to be careful. On the positive side, that range trade developed. We got that tighter range now we can monitor for clues. Those large ABCD structures on the weekly charts, they're still in place. They're not that clean now, but they're still in place. So if I pull over the S&P 500 again, you can see here on a weekly basis, there still are large ABCD structures. And let me get the bar that doesn't do that. On the ABCD structures, you still have this nice push up. It still held that low so far, and that's a large ABCD structure of the upside. So I don't want to get negative or too negative, but at the same time, I think we need just a little bit more information before we put more money on the line. The dollar looks to have peaked. And this, I believe, is a positive, not so much for the domestic equities, but for the overseas markets. So if I look at the dollar, the dollar made that spike. I sold out this week on this at 31 and 41. We got a little bit higher. We came off with some volume expansion on Friday. I think we're going to come back down now, testing this 24. There's two bars here, the 24.22, and then the top of this one's 23.98. So somewhere in that area probably is where it's going to try to come back to on the first push. And that might be a place that we try to go back into it. We'll just have to measure it as we go. As you know, the ECB is going to do their thing not this week but next, and that's going to have a huge impact on whatever happens here. If they disappoint, the dollar is going to fall. If they come out and do quantitative easing, the dollar's probably going to rally again. So that decision is a week away. I suspect the dollar and foreign currencies are going to take a rest in front of it now that they've made their big runs. They've anticipated what they want. The risk is to the downside now as a result of that, probably in the foreign currencies. The risk is to the downside in that they disappoint. In other words, the market's already built in that ECB will do some sort of quantitative easing. And they expect at this meeting. I suspect that they don't get at this meeting unless they get something that says, okay, we're going to do it on day X, they're going to be disappointed. Oil finally does is that two-bar reversal we talked about. On the positive side, there's more and more talk that the Fed won't be able to raise interest rates due to the falling inflation expectations. Inflation just is not, it's not prevalent here anywhere. And if the dollar continues to be strong, it makes it harder and harder for the Fed to raise rates, because if they do, they're going to make the dollar even stronger, which is going to put turmoil not only here but elsewhere, especially elsewhere in other currencies and other markets. Fundamentally, the negatives, I think this ECB decision I just talked about, I think that's a negative in that, the risk is to the downside there. And the central banks are such a big part of why these markets are where they are. The oil markets continuing to fall unabated has been a problem, although as I just showed you, that may finally be changing. If I want to talk about what to watch this week, it's earnings, folks. It's earnings, earnings, and earnings. You got a lot of big names. The majority is the financials that we just talked about, but you've also got Intel. And Intel is going to be a huge number. And it's going to be huge because Intel is, of course, such a big factor in the stocks. And if I pull Intel back, you can see the bump up here on high volume, another bump up on high volume. We had another bump here on high volume to the downside, right? And that was the December 19th. But, for the most part, this has set up well to try to bump higher. In other words, it's in a range trade, and it has two swing point highs now, this one and this one, at the highs. The problem is that by the time Intel reports, and that's going to be on Thursday, and that's the afternoon. So that will, or this will probably print as a swing point low by then, and you'll have another one. So you're going to have double setups for a larger move to the upside or to the downside. That's going to be a huge number, and it's going to be a huge number either way it breaks. If they actually break and push higher, very positive. If they break and push lower, Intel really has an impact on other stocks. So I think that number, along with the financials, are the big ones to watch in the coming week. You've also got one other number that's worth looking at. It will be our first read on the oil sector, Schlumberger. Very negative looking chart in general. Can it come back? You know, it came back up, did a push up to do a retest regen off these lows. I suspect oil is going to surprise folks and get a pretty good bounce. And the reason for that is this push back up had some good volume to it. Now, it was coming into a big bar. That's what kept it down this time. If I wanted to gamble in front of earnings, I would be gambling on these oil stocks to move higher. That's the way I would trade them. So anyway, I think SLB will be a big one as we get going in the new week. Economics, earnings, you know, the earnings, of course, to me are the big thing. You've got some economics. Most of the data is out on Wednesday. I don't see huge numbers here moving anything. I think it's going to be about the earnings, not the economic numbers. Geopolitically, really not much happening yet. If I look at the bottom line, you know, you've already sensed probably, you know, I'm thinking that we still, you know, just like last week, we were observing more than acting. I think this week we need to think about being careful and then waiting for some decision point. And that decision point to me is Intel, the financials, and how we break on that the S&P 500 middle range bar, that one big bar. I think that's what we want to focus on, and we want to decide what happens, and that probably happens Wednesday, Thursday. And so by then we'll probably have a much clearer picture as to what to do. But as we go into the portfolio here, there's really 4 areas right now that are standouts. These 4 areas continue to you know, do really well, and so I think we have to continue to focus on them. Let's pop into these charts and I'll show you what I'm talking about. XLP is the first one. This one we actually bought on Friday, and that purchase, even though it failed a test failure at the highs, and this is the weekly chart, let's go to the daily, had a test failure at the highs, it pushed that high with more volume. I suspect it's going to get back up there and try it again. So that one, you know, looks okay. I don't see anything really bad about it. If I look at the housing market, this is one I put an order in to get in. This did a multiple swing point break at the highs, volume expanding, earnings are all starting to come out. You know, this one is one I'd like to try to get into if at all possible sometime this week. Another stock that we should look at, and let's not stock, but general group, is the GDX. They broke multiple swing points here. They're starting to spike up. They're going to go after these highs. This whole group is starting to look good. You know, I was trying to get into them again. They just cleared this bar on the weekly, coming into a retest regenerate zone. This is kind of the key critical area. You know, can they get over this? So I don't want to get too aggressive and just go after them, because I do think they're going to spike and then retrace as a result of this on the weekly time frame. On the daily time frame, of course, with the multiple swing point break, that probably pushes them to start the week. But then after that, I suspect we come back, and that's where I'd probably want to focus again to try to get in on a retest regenerate off these swing point highs. So I'll probably be still looking at individual stocks. They've already done their earnings, and there's no reason for us to, you know, the trade in them was last week. I had a couple orders out there, didn't get them, and you know, that sometimes is just the way it goes, and so you have to wait for your entry and then try again. The other one, of course, is China. I did not get the volumes here anymore, although I am starting to get volumes on the Chinese stock market itself, so I'll be putting up a different chart again pretty soon for the Shanghai market. When I look at this, you know, just from a price perspective, it came back, did a retest regen. I'm sure the volumes here were lower than there, regenerated higher. This just looks like a nice range trade. So the trade here, if we wanted to actually look at it, is an ASHR, which is a good proxy for that. Although it's a little financial heavy, it's a good proxy. As it comes back into the swing point high, that's the buy. I bumped the order up a little bit this week to try to get into that position. So looking at what's in the portfolio, you know, we don't have that much in the portfolio right now. Matter of fact, we have less in the portfolio now than we've had at almost any point over the last couple of years, only about 35% invested. When we consider what we're in, we've got 4 core positions, 3 trades. The Apple we happen to get in at a very good price. IWM we're just sitting in, waiting. And that really depends on if these indexes are going to move higher or lower. XLP we just started in. If we go down here, I actually upgraded NXPI. This is the one I'd probably want to highlight today. This chart, unfortunately, I had waited, pulled my stops up to protect it because we had these 2 swing point lows here and I had a late entry I didn't want to lose money on. Well, a lot of times when you do that, you get stopped out right at the wrong point. That's exactly what happened. And then we got the breakout on Friday over the 3 swing point highs. I suspect this is going to carry, and even though we've only got a 2.5% position in it now, unless it gives us an order first thing Monday, I don't think we're going to get in it on this push. That's unfortunate. The fortunate part is that we're in it, and I think it's a core position now. It's got a range trade that takes it up to what is that, about 5, 6, 7 points or so. So that could take it up to about the 85 area, 86 area. So I want to try to get a little bit more of this. On the downside of this is it's probably going to run up into earnings, and those earnings is not something I want to be heavily invested in. So I will put an order out in the morning, try to grab it again, but if I don't get it, I'm just going to have to ride it with what we have. So NXPI, core position now. AWK, range trading at the highs. ZLTQ, we could look at that one. That one actually did well again. This is a hard trade because the beta is very high. As you know, this stock moved up 40% when we first bought it. And it's done that in 3 months. That makes it pretty hard to buy much more, right? And so as you know, we've sold it, bought it low. Sold it, bought it low. We're going to try to sell it again. But if we're getting close enough now and we're hitting, volume-wise, we're hitting these highs with volume, I don't want to sell it here. Even though it tested, failed, had more volume. That tells me it's probably going to go right back up there and try again. The price projection on this is around 34. So if we spike to 34 before earnings or up into that area, that's where we want to sell. And then we'll want to try to buy it back around the 30 number. So again, we got to wait, try to get the the big push again, and then buy it back. You have to buy these high beta stocks on pullbacks, otherwise your entries just aren't good. So that's kind of a big picture, where we're at. Yeah, we're not invested much. We're actually up on the year off the strength of the positions that we carried into the year and just the fact that we protected them. We lost our Google trade, which we've been in for a long time. It's kind of unfortunate, but you just can't stay with these. As much as I like Google and as much as I like them long term, right now this chart really looks bad. And it did test, it did hold, it may hold here in front of earnings, but I just don't think it's worth the risk at this point to hold it and potentially take even more losses on it before it finds an area that is going to find support. And if I pull it back on the weekly, you can see the breaks here, and if I pull it back on the monthly, you can see that this thing can come quite a bit lower before we get some sort of actually let me get Google up if we're going to look at Google instead of the weekly or the monthly on the GSP. Here we go. So Google is up here. On the monthly, this thing could come back to this low. It's about 421. We'll look at it again, but it's not up here. We'll have to wait. Okay. All right, well, that's a lot, as always. Hopefully that's helpful. These notes are always there available to you as well, so you can pop in and read those. And this week will probably be the week that we get some sort of an indication as to should we position heavier or should we still remain lightly positioned long and wait for a better opportunity. That's going to be the way we look at it, and we got those 3 big tails, in particular the S&P 500, that big bar, Intel's report, and the financial reports. That probably will be our cue this week. Have a great one. Thanks for being there, and I will see you again soon.